Hey everyone, Paul Clark here, and I've got to tell you I've had a lot of fun putting these videos together talking about personal finance, about stocks, but I feel like we could use a little space. And by that I mean SPCE ticker, of course, Virgin Galactic. We're going to be looking into, one of the stocks that, has a ton of potential, but not a lot of actual results so far, right? So I want to talk a little bit more about this stock, what's going on with it, what could happen if things went really, really well, and of course we all know if things go bad, the worst we can do is zero, which of course, depending on how much you're investing, can be pretty horrible. So right off the bat, I can tell you, I've heard some comparisons that this could be a Tesla-like stock. So if you go back and you look at Tesla back in 2010, on the split adjustment stock price, they were trading at like $3 or $4 a share. And from where they're at today, they increased by, make sure I'm getting this right, they increased by over 114 times. So 1,000 invested in Tesla back in 2010, be $114,000 for you today if you had the guts to actually hang on through that. Because again, keep in mind, if you actually watch 1,000 go to 114,000, you had to watch it go to 10,000 and not sell, and 50,000 and not sell, but that's a topic for a different video. Okay, so we think about that though. Tesla increased in value by 114 times. So let's think about what it would actually take for Virgin Galactic to be able to reach a valuation that big 10 years from now. Well, we can start out, there have been some consultants and some investment firms that have put out estimates for what the space economy could be worth in terms of revenue by 2030. And their estimate was that, in total, all companies participating in the space industry would be able to generate revenue of $800 billion. That's a pretty big number, of course. But let's put that in perspective. Like, how much of the market share does this company need to be able to match Tesla's valuation? So again, let's think about everything goes right for Virgin Galactic. 10 years from now, they've got X percent of the market share of the 800 billion. Let's say that number comes true. What would they need to have this stock at a Tesla-like return? Well, let's take a look at some scenarios here. So first of all, when we look at this, let's start out assuming that Virgin Galactic can get 20% of the market share. So 20% of that 800 billion by the year 2030. Again, this is if things go really well for this company, of course. So that would mean that they would have revenue in 2030 of $160 billion. And when we look at the number of shares that are outstanding, so I'm going to be assuming that in the next 10 years that shares are going to be diluted by 100%. I think that this is a company that even if they actually are going to end up being successful, I think they're going to need to raise capital. Their current cash burn, we can kind of come back to this, but their current cash burn, the management's kind of offering guidance on, is about 59 billion a quarter, which if they're burning cash that quickly, they don't have any meaningful revenue right now, they definitely could be, needing to issue more stock along the way. And that's to say nothing of, stock options issued to employees, things of that nature. So I'm going to be assuming that this stock is really going to be diluted by a fairly substantial amount. So we're going to say that there's going to be twice the number of outstanding shares in 2030 as there are today. Okay? And then I'm going to say, okay, well, if this company is really successful, what's the sales multiple that the market's going to assign to this company? And I'm going to just assume that, again, if this company can actually get 20% of the space economy by 2030, that the market's probably going to put some kind of valuation somewhere in the range of maybe 8 times sales. That might be fairly conservative. I mean, you got to keep in mind though too, this is really kind of uncharted territory, not just for the companies trying to go to space, but for investors trying to value them. We don't have a good benchmark about, a successful space company that's, earning a solid net income, solid cash flow, what those multiple valuation metrics might be. So keep that in mind. But, if we then assume, okay, the share dilution, we assume, the 20% of the market, that would get us to a market cap in 2030 of, what would that be? $1.28 trillion. And if you look at that on a per share basis, then that would be $2,735 a share. Okay. Well, most recently, their share price actually just closed October 16th. They just closed at 22.44. So when you do that division, you say, okay, well, what is 2,735 divided by the 22.44? You come up with 121 times the share price, which sounds pretty familiar, again, to the 114 times increase for Tesla. So that's kind of a bit of a scenario you could imagine, just modeling out revenue, right? And because at this point, modeling out revenue is going to be much easier than a company that is losing hundreds of millions of dollars a year. But that's what it would take. If they can say that they've got 20% share of the market, so you can say 80% of the others can go to your Amazons, it can go to your, Jeff Bezos, it can go to Elon Musk and SpaceX, so they can have the other 80%. If Virgin Galactic can actually achieve that 20%, earn a price to sales multiple of 8 times sales, okay, absorb having their stock diluted by twice the number of outstanding shares, that's kind of the case that would allow you to get back to, 114 times, or I'm sorry, 121 times the value of the current stock. And I feel like this is kind of just a reminder that, this is really a company that it's almost really all or nothing. I mean, this company is either going to be really out of this world successful, if you will tolerate that phrase there. It's either going to be out of this world successful, or it's going to really kind of be worth nothing. I don't really see like a strong middle ground, scenario for this kind of a company. Now, of course, Virgin Galactic, bears the name Virgin Group, which is affiliated with Richard Branson. Richard Branson being the founder of Virgin Group, and then, being the founder of Virgin Galactic by extension. And first of all, you think about the history of Richard Branson and the history of Virgin. They started out as a record store, and, from record stores to trying to send people to outer space. I mean, that is certainly a big leap. So regardless of what actually happens with this company, you have to take your hat off to Richard Branson, or Sir Richard Branson, for what he's been able to achieve. And, it's something where I think he's really had fun along the way. So you definitely can't discount, the life that he's led, the contributions, and his own enjoyment that he's been getting out of some of these things. It's cool to see. But when we talk about, Richard Branson, for as great of a business person as he is, the events of 2020 have really disrupted a lot of his businesses, and that's not directly related to Virgin Galactic, but it's indirectly related, So, and what do I mean by that? Well, earlier this year, he actually had to sell, or rather, this gets a little esoteric, but there's this subsidiary that he owns 80% of that, themselves own 69% of Virgin Galactic. They were announcing that they were going to be selling 25 million shares of this. So when you start doing the math of that, for what Richard Branson's stake is, he had a majority stake in Virgin Galactic, prior to that sale. After the sale, he no longer has control of the company. So, I think with him, having the energy that he's put into Virgin Galactic, I don't think that's, certainly something he wanted to do. And that raised him somewhere between 400 to 500 million. And he needed that to be able to sustain his other businesses, And again, that's just with things as they've gone so far with, again, the uncertain times of 2020. So if things were to get worse in any of his other businesses, that could certainly be a detriment, where if he has a diminishing stake in this company, and if the fact that he was, the founder, that could be a headwind for this company, something to keep in mind. And also, certainly you can think about if his net worth is taking a hit with, the situation going on, then he is less likely to personally be a lifeline if he wanted to inject more capital into this company. So again, just something to be aware of. From a balance sheet perspective, this company, Virgin Galactic, they do actually have a pretty strong balance sheet, which again, you need a strong balance sheet if you're going to be able to weather the kind of losses that they're absorbing right now. But, in all likelihood, they've got $360 million of cash on the balance sheet as of the end of June, the most recent quarter that they've reported. And, when you kind of look at it, they have enough cash, by the looks of it, to be able to really absorb kind of the net income losses that they're forecasted for all of 2020 and all of 2021. Now, again, what the strategy is after that and how they actually go about raising additional funds, of course, is a question mark. But for the next year and a half, it looks like they're pretty solid in terms of their cash position on the balance sheet there. Now, Virgin Galactic, keep this in mind. They actually want to be a vertically integrated supplier of this kind of space tourism. So, what does that mean? That means that they want to build the spaceships and they also want to operate them. And to me, it kind of brings to mind that, hey, if that business model made sense, I'm not aware of Boeing, running or operating any airlines. Boeing makes the spacecrafts. You have their customers, their Southwest and all the other airlines, of course. They manage the business of actually, flying the airplanes. So you got to think, okay, is this really something that makes sense for them to do, to be taking on the responsibility of both? So it's something where the company spins it as a positive. They're saying it's a positive that they're vertically integrated. I'm saying, hey, is this potentially them biting off more than they can chew, especially considering the fact that they're going to have a lot of challenges, funding this growth over time if they're not going to be making any kind of material net income for the foreseeable future. We talk about Richard Branson and Virgin Galactic. They had a goal to send Richard Branson on a flight to space in 2020. They've unfortunately had to push that back. They're now estimating that that's going to be in the first quarter of 2021 that they're going to send them up there. That's kind of the consistent with a lot of other delays that this company has experienced, which, as you can imagine, if you're, operating a company like this, that, it's so unique, it's offering a new service, there's a lot of things that can come up that are unexpected, so the fact that they have pushed off Richard Branson from going up to space, kind of just another cause for concern. If you are looking for, any kind of positive that can come out of this company, regardless of if they can actually go on to achieve any kind of meaningful success in the long run, they are planning to send Justin Bieber to outer space. He's one of the ones that has signed up to, be an initial customer. And so, I think that there's a lot of people out there that would be happier with Justin Bieber not on this earth anymore. So at least temporarily, Virgin Galactic is going to oblige with that request. But in all seriousness, this company has already put it out there where you can kind of pre-register your trip to space, okay? Even though they don't exactly know when that's going to be. But if you're rich enough to be paying the prices that they're charging, then maybe you don't necessarily care, about the best use of your funds. So, they've sold 600 tickets worth $225,000 each. So that's certainly an expensive price point, which is another, potential concern with this company is that, I think this might almost have the feel of a novelty experience where even with people with a high net worth, they might be only doing this for the experience once, and there might be a low likelihood that they're a repeat customer. And kind of continuing the conversation about the customer counts, the company's goal is to have 3,200 passengers taken to space by the end of 2023. Again, I think that's a pretty ambitious goal, especially the fact that you've only had 600 people pre-register to go along with this. So they certainly would have a lot more work to sell that additional capacity if they want to meet that goal. But let's even talk about if they meet that goal. Let's say for whatever reason they can't raise prices and that for all the 3,200 seats they want to sell, or for all those passengers, that they sell them all at a price of $225,000, just like the first 600 people that are pre-registered. Well, what would that generate for them? Well, if we look at that, let's see here. That at $250,000 a piece for 3,200 people, you'd be looking at $720 million in revenue from that. So that's not even really enough to cover their cash burn. When you go back and consider that they're burning cash at about $59 million a quarter. So right now, it's just hard to see that being something that they're really going to be excited about in terms of what that growth is going to look like in the next couple years. And let's really kind of think about what the company is offering. So their service, they want to take you to the edge of space where you're going to be able to experience a few minutes of weightlessness. Okay, so when you think about the value of that for $225,000, again, it certainly changes. If your net worth is as high as what some of their target demographic is, if you're worth $10 million, maybe that's not a big deal for you. But certainly from my own perspective, I wouldn't be clamoring to say that I'm going to spend $225,000 to experience weightlessness at the edge of space for a few minutes. So to each their own. Okay, and so now let's just kind of do like a little walkthrough on their financials here. So this just really amuses me, the fact that, when you look at their 2019 revenue, they generated $3.8 million in sales. Keep in mind that their current market cap is about $5 billion. And market cap, just talking about, hey, look at the total number of shares that are outstanding, multiply that by the share price that's currently trading at, and that's what you get for your market cap. So again, this is being valued based on where the stock price is at $5 billion, and they've actually only generated $3.8 million in sales. There's, you look at restaurants, like 5 restaurants that you'd put together, are probably selling more or have more revenue than what Virgin Galactic has. And again, that's now. Certainly that changes, when they kind of get operational, all those things, because that $3.8 million in revenue, that's only for kind of like, they have kind of some small engineering work that they do. But again, really, in the grand scheme of things, pretty trivial. But I personally have yet to see a company generating that little revenue compared to the huge valuation. That's incredible. When we look at their net income, we go back to 2018, they lost $167 million. In 2019, they lost $213 million. Now, they're estimated in 2020 to be losing even more, about $260 million. And then by 2021, they're finally kind of projected to at least get the trend on the right path, and they're projected to only lose $160 million. So pretty interesting to me, again, when you're talking about a company this expensive and you're excited to be losing $160 million. Which, by the way, I think that's something investors, I feel like, really need to be aware of. It's one thing to be investing in a company that is currently losing hundreds of millions of dollars, and it's another thing to not know it. Okay, and I know a lot of companies that have recently gone through an IPO, or they're kind of new, or they're kind of getting their business online. I know that in a lot of those cases they're not yet profitable, but there are some companies that actually are coming to market that do have proven business models. So I had a video on Facebook's IPO, for example, and the year before Facebook went public, they generated $1 billion in profit, and they've actually since they were public, they've never had a year where they've lost money. And again, you compare this with a company that is projected from 2017 to 2021 to be losing close to $1 billion. They're projected to, over that time frame between what happened and what's projected through 2021, projected to lose about $938 million. Again, that's not chump change. Okay, so those were some of my notes, some of my thoughts on Virgin Galactic. Again, I think that this is something that has really high potential. I think that, certainly if they can have any of those ambitions come to fruition, we kind of already walked through that, certainly, the valuation could be there to justify a very, very nice return. But on the other hand, this is a really risky company. There's the risk of, a fatal accident harming the perception of this company. There's risks of, SpaceX, and, with what Jeff Bezos is doing, there's risks that those are more successful than what Virgin Galactic is ultimately going to be, and the fact that we have no idea when they're actually going to be profitable, and if the company can even sustain their operations long enough to see success. One crazy scenario, you got to think about with this company is, what if they actually are on the verge of bankruptcy and, or do go bankrupt, and then Elon Musk buys their assets, or Jeff Bezos buys their assets, where eventually you can see Virgin Galactic, in a sense, going on to be utilized, but not to the benefit of shareholders. So all things you have to keep in mind. So hope you guys enjoyed this video. Hope you guys took something out of it. But I thought it was an interesting company to kind of walk through. So it was fun putting it together. And thanks for watching.